Good morning, everyone. Today we'll discuss national income and related aggregates. I'll ask questions and each of you will answer. Ready?
Yes, ma'am. We are ready.
Great. So first question is, what is GDP?
GDP is the total value of all final goods and services produced within a country in a year.
Correct. Well done, Mahi. Now can you explain it?
It measures the economic performance within a country's domestic territory.
Perfect, Mahi. Now moving to second question. 2. How is GNP different from GDP?
Ma'am, GNP includes income from abroad while GDP considers only domestic production.
Well, Ansh, that's correct. GNP includes income from abroad while GDP considers only domestic production. Can you explain it?
Ma'am, GNP accounts for the production of nationals both within and outside the country. For example, if an Indian company operates in the USA, the income earned by that company will be included in India's GNP.
Great job, Ansh. Moving to next question. 3. What is the formula for NNP?
Ma'am, formula for NNP is NNP equals GNP minus depreciation.
Well said. Net National Product NNP equals GNP minus depreciation. Okay, Rashi, can you explain it?
Ma'am, it represents the net production by a country after accounting for capital wear and tear. Simply put, is the total production after subtracting the loss due to old or used up machines. For example, if a factory produces goods worth $1 million but loses $100,000, due to machine wear, the net production is $900,000.
Perfect, Rashi. Well explained. Moving to next question. 4. What is NFIA?
NFI stands for Net Factor Income from Abroad. It is calculated as income earned by residents abroad minus income earned by foreigners domestically.
Very well, Mahi. NFI stands for Net Factor Income from Abroad. It is calculated as income earned by residents abroad minus income earned by foreigners domestically. Okay, do you want to explain it a bit?
Ma'am, it differentiates GDP from GNP.
Good work, Mahi. Moving to next question. 5. What does real GDP measure?
Ma'am, real GDP measures GDP at constant prices, adjusting for inflation.
Exactly, Vansh. Real GDP measures GDP at constant prices, adjusting for inflation. Okay, can you explain it a bit?
Ma'am, real GDP shows the actual growth of the economy by excluding price level changes.
Well done, Vansh. Moving to next question. 6. What is per capita income?
Per capita income is the average income of a country's residents calculated as national income divided by the population.
Correct, Rashi. Per capita income is the average income of a country's residents, calculated as national income divided by the population. Can you explain it a bit?
Yes, ma'am. It indicates the standard of living.
Correct. Let's move to the next one. 7. What is disposable income?
Ma'am, disposable income is personal income minus taxes.
Correct, Mahi. Disposable income is personal income minus taxes. Can you explain it a bit?
Disposable income represents the income available for savings and consumption after paying all the taxes.
Correct. Very well explained. Okay, class. Moving to next question. 8. Why are transfer payments excluded from national income?
Transfer payments are excluded as they do not represent production-based income.
Correct, Rashi. Transfer payments are excluded as they do not represent production-based income. Can you give an examples for transfer payments excluded from national income?
Examples of transfer payments include pensions and unemployment benefits.
Perfect. Let's move to the next question. 9. What is GDP at market price?
Ma'am, GDP at market price is the value of GDP including indirect taxes and excluding subsidies.
Correct, and GDP at market price is the value of GDP including indirect taxes and excluding subsidies. Okay, tell me, what GDP at market price reflects?
It reflects the market value of goods and services.
Correct. Moving forward. 10. How is GDP at factor cost calculated?
Ma'am, GDP at factor cost equals GDP at market price minus net indirect taxes.
Correct. GDP at factor cost equals GDP at market price minus net indirect taxes. Okay, Mahi, can you explain it a bit?
Ma'am, GDP at factor cost removes the effects of taxes and subsidies to show the actual cost of production.
Very well, Mahi. Moving to next question. 11. What is the expenditure method of GDP calculation?
Expenditure method of GDP sums consumption, investment, government expenditure, and net exports.
Very well. It sums consumption, investment, government expenditure, and net exports. Okay, can you tell me what this method focuses on?
Expenditure method of GDP focuses on aggregate demand in the economy.
Good, Rashi. Let's move forward to next question. 12. What is the income method of GDP calculation?
Income method of GDP is sums wages, rent, interest, and profits earned by factors of production.
Correct. Income method of GDP is sums wages, rent, interest, and profits earned by factors of production. Now, can you tell me what it measures?
Income method of GDP measures income generated in production.
That's correct. Income method of GDP only cares about income generated in production. Okay, class. Moving to next question. 13. What is the output method of GDP calculation?
Output method of GDP calculates GDP by summing the value of final goods and services produced in each sector. For example, if the agricultural sector produces crops worth $500 billion, the industrial sector produces goods worth $700 billion, and the service sector generates $800 billion. Then, the total GDP using the output method would be the sum of these values.
Yes, perfectly explained, Vansh. Output method of GDP calculates GDP by summing the value of final goods and services produced in each sector. Now, can you tell me what this method highlights?
Ma'am, this method highlights sectoral contributions to the economy.
Exactly. Output method of GDP is all about summing sectoral contributions to the economy. Okay, class, moving forward to next question. 14. What is NDP?
NDP is net domestic product and it is calculated as GDP minus depreciation.
Correct, Rashi. NDP is net domestic product and it is calculated as GDP minus depreciation. Now tell me what NDP is for?
Ma'am, net domestic product shows the net production within the domestic territory.
Very well. Moving to next one, 15. Why is depreciation deducted in national income?
Depreciation accounts for the wear and tear of capital goods.
Right, Ansh. Depreciation accounts for the wear and tear of capital goods. Can you explain it a bit?
Depreciation is deducted in national income because machines and buildings get old and lose value over time. Just like a mobile phone becomes slower after a few years, factories and equipment also wear out, so we subtract their loss from national income.
Correct, Ansh. Moving forward to next question. 16. What is green GDP?
Ma'am, green GDP is GDP adjusted for environmental degradation and resource depletion.
Correct, Rashi. Green GDP is GDP adjusted for environmental degradation and resource depletion. Can you explain it a bit?
Green GDP is the GDP calculated after considering the damage to nature, like pollution and deforestation. For example, if a country earns money by cutting down forests, green GDP subtracts the environmental loss from the total GDP to give a more accurate picture of real progress. It incorporates sustainability into economic measurement.
That's correct. Green GDP is all about subtracting environmental loss from the total GDP. Okay, class, moving forward. 17. What is double counting?
Double counting is the inclusion of intermediate goods along with final goods in GDP.
Correct, Vansh. Double counting is the inclusion of intermediate goods along with final goods in GDP. Can you explain it a bit?
Yes, ma'am. Double counting happens when we count the same product more than once in GDP. For example, if we count the price of wheat and then also count the price of bread made from that wheat, it inflates GDP and gives a wrong total.
Very good, Vansh. Let's move to next question. 18. Why are illegal activities excluded from GDP?
Illegal activities are excluded because they are unrecorded and unofficial.
Correct, Rashi. Illegal activities are excluded because they are unrecorded and unofficial. Can you tell me why illegal activities are excluded from GDP?
Ma'am, GDP measures only documented economic activities, and illegal activities are not officially recorded. For example, if someone sells something illegally, it doesn't get counted in GDP because the government has no record of it.
That's correct and clear the concept. Okay class, let's move forward to next question. 19. What is gross fixed capital formation?
Gross fixed capital formation is investment in fixed assets like machinery and infrastructure.
That's correct, Mahi. Gross fixed capital formation is investment in fixed assets like machinery and infrastructure. Can you explain it a bit?
Gross fixed capital formation means spending money on things like machines, buildings, and roads to help a country grow. For example, when a factory buys new machines, it helps produce more goods in the future.
Very good, Mahi. Moving to next question. 20. What is the significance of real GDP over nominal GDP?
Real GDP adjusts for inflation while nominal GDP does not.
Correct, Ansh. Real GDP adjusts for inflation while nominal GDP does not. Can you explain it a bit more?
Real GDP shows the actual growth by removing the effect of rising prices while nominal GDP does not. For example, if a country's GDP increases because prices went up but production stayed the same, nominal GDP will rise, but real GDP will show no real progress.
Correct, Ansh. Let's move forward to next question. 21. What is the role of subsidies in GDP calculation?
Subsidies are added to factor cost when calculating GDP at market prices.
That's correct. The role of subsidies in GDP calculation. Subsidies are added to factor cost when calculating GDP at market prices. Can you explain it a bit?
Ma'am, subsidies in GDP calculation reduce production costs and impact market price calculations. For example, if the government gives farmers a subsidy to reduce fertilizer costs, the farmers can produce crops at a lower price. This affects the overall market price of agricultural products and helps in GDP calculation.
Very good. Let's move forward to next question. 22. What does HDI measure?
HDI measures human development based on health, education, and income.
That's correct, Mahi. HDI measures human development based on health, education, and income. Can you tell more about it?
HDI complements national income by focusing on quality of life. HDI helps us compare well-being, not just wealth.
Very good. HDI helps us compare well-being, not just wealth. Okay, class. Let's move forward. 23. Why is informal sector income excluded from national income?
Informal sector income is excluded due to lack of proper records and regulation.
Correct, Vansh. Informal sector income is excluded from national income due to lack of proper records and regulation. Can you explain it a bit more?
Informal activities are often unreported and cannot be accurately measured. For example, a street vendor selling vegetables or a local tailor stitching clothes at home may not officially report their earnings to the government. Since their income is not taxed or recorded in official accounts, it is excluded from the national income calculation.
Very well explained, Vansh. Okay, class, let's move to next question. 24. How is net export calculated?
Ma'am, net export equals exports minus imports.
Correct, Rashi. Net export equals exports minus imports. Can you explain it a bit?
Ma'am, net export reflects the trade balance in the economy. If exports are more than imports, the country makes a profit, and if imports are more than exports, the country loses money.
Very good, Rashi. Moving to next question. 25. Why are only final goods included in GDP?
Final goods are included in GDP to avoid double counting.
That's correct. Final goods are included in GDP to avoid double counting. Can you explain it a bit more?
Since intermediate goods like flour used to make bread become part of final goods, their value is already included as wheat. So counting them separately would overstate GDP.
Very well, Mahi. Final goods are included in GDP to avoid double counting. Okay, class, moving to next question. 26. What is net national income, NNI?
Net national income, NNI, is the total income earned by a country's people after adjusting for taxes and subsidies.
That's correct. Net national income, NNI, is the total income earned by a country's people after adjusting for taxes and subsidies. Can you explain it a bit more?
It is calculated as NNP, Net National Product, indirect taxes plus subsidies. This shows the actual income received by workers, businesses, and resource owners after the government takes taxes and gives subsidies.
Very well, Rashi. Okay, class, moving to next question. 27. What is value added?
Value added is the increase in value at each stage of production.
Correct, Ansh. Value added is the extra worth a product gains at each step of making it. Can you explain it a bit more for better understanding?
Value added helps avoid double counting in national income. Instead of counting the same product multiple times, we only count the new value added at each stage. For example, a farmer sells wheat for 10 rupees. A mill grinds it into flour and sells for 20 rupees. A bakery makes bread and sells for 50 rupees. The value added is 10 rupees plus 10 rupees plus 30 rupees barabar 50 rupees hai.
Very well, Ansh. Moving to next question. 28. What is the importance of GDP deflator?
The GDP deflator shows how much prices have changed in the economy over time.
Correct, Mahi. The GDP deflator shows how much prices have changed in the economy over time. Can you explain it a bit more?
It compares nominal GDP, current prices, with real GDP, constant prices, to remove the effect of inflation. This helps us understand whether GDP is growing because of higher production or just higher prices.
Very good, Mahi. Moving to the next question. 29. Why is capital gain excluded from national income?
Capital gain is the profit from selling assets like land or stocks. So capital gain is not included in national income because it doesn't come from production.
Correct. Capital gain is excluded from national income because it does not result from productive activity. Can you explain it?
National income measures income from production, not asset transactions, so that's why capital gain excluded from national income.
Perfect. Let's move to next question. 30. What is included in private final consumption expenditure?
Private final consumption expenditure includes all the money people spend on goods and services for their daily needs.
Correct. Private final consumption expenditure includes all household spending on goods and services. Can you explain it a bit more?
Private final consumption expenditure is a major component of GDP by the expenditure method. This includes spending on food, clothes, rent, transport, healthcare, and entertainment.
Correct. Moving to next question. 31. What does gross capital formation include?
Gross capital formation includes investments in fixed assets and inventories.
That's correct. Gross capital formation means the total investment in building assets for future production. Can you explain it a bit?
It includes fixed assets, buying machines, factories, or buildings, inventories, stocking up raw materials or finished goods. This helps the economy grow because businesses invest in things that increase future production.
Very good. Let's move forward. 32. Why are second-hand goods excluded from GDP?
Second-hand goods are excluded because they were already counted in the year of production.
That's correct. Second-hand goods are not included because they were already counted in the year of production. Can you tell me an example?
If a car was made and sold in 2020, its value was already added to GDP. Selling the same car again in 2024 doesn't create new production, so it's excluded, as including them would lead to double counting.
Very good, Rashi. Moving forward to next question. 33. What is the relationship between GDP and NDP?
Net domestic product, NDP, is calculated by subtracting depreciation, wear and tear of assets, from gross domestic product, GDP.
Exactly. NDP equals GDP minus depreciation. Can you explain it?
Yes, ma'am. GDP shows the total production, but machines and buildings lose value over time. NDP gives a more accurate picture of the economy by adjusting for this loss.
Very good, Ansh. Let's see the next question. 34. Why is income inequality ignored in GDP?
Income inequality means some people earn much more money than others, creating a gap between the rich and the poor. Now, as far as our question is concerned, GDP only measures the total production of goods and services, not how money is shared among people.
That's correct. GDP focuses on total production, not its distribution. Do you want to add point in it?
GDP measures economic performance, not social equity.
Very good. Let's move to next question. 35. What is the significance of NFIA in GNP?
Net factor income from abroad, NFIA, shows the money a country's people earn from other countries, minus what foreigners earn here. Significance of NFIA in GNP. It adjusts GDP to include income from abroad, giving a better picture of a nation's total earnings. Formula: GNP equals GDP plus NFIA.
Very good. NFI adds the net earnings of residents from abroad to GDP. Can you give an example for better clarity?
For example, if Indian workers earn money in the US and send it home, it adds to India's NFIA and increases GNP. So like this, NFIA has significance in GNP calculation.
Very good, Rashi. Let's move to next question. 36. How are inventories treated in GDP calculation?
Ma'am, inventories are included as part of gross capital formation in GDP calculation.
That's correct, Mahi. Inventories are included as part of gross capital formation in GDP calculation. Can you explain it a bit?
Inventories are represent as unsold production. Like, if a company produces goods but doesn't sell them yet, they are still counted in GDP because they add to the economy's stock of goods.
Very good. Let's move to next question. 37. What is meant by circular flow of income?
Ma'am, the circular flow of income shows how money moves between people and businesses in an economy.
That's correct. Circular flow of income is the continuous flow of income and expenditure in an economy. Can you explain it a bit?
Circular flow of income shows the interdependence between households and firms. This cycle keeps repeating, showing how income and spending are connected in the economy. For example, a worker earns a salary, uses it to buy groceries. The shop owner earns money, pays workers, and the cycle continues.
Very good. Let's move to next question. 38. Why are exports included in GDP?
Exports are included in GDP as they represent domestic production sold abroad.
That's correct. Exports are included in GDP as they represent domestic production sold abroad. Can you explain it a bit?
Ma'am, exports contribute to a country's economic output, so it is included in GDP.
Very good. Moving to next question. 39. What is net export?
Net export is the difference between a country's exports and imports. Formula: net export equals exports minus imports.
That's correct. Net export is the difference between a country's exports and imports. Can you give an example?
For example, if India exports 500 crore rupees worth of goods and imports 300 crore rupees, net export equals 500 minus 300 equals 200 crore rupees. Positive trade balance.
Perfectly explained. Moving to next question. 40. Why is the tertiary sector important in GDP?
The tertiary sector, service sector, is important because it provides essential services and contributes the most to GDP in developed countries.
Correct, Mahi. The tertiary sector contributes the most to GDP in developed economies. Okay, can you give an example of tertiary sectors?
It includes banking, healthcare, education, transport, IT and tourism. As economies develop, people spend more on services, making this sector the biggest contributor to GDP.
Very well. Let's move to next question. 41. What is the informal sector?
The informal sector includes jobs and businesses that are not officially recorded or taxed by the government.
That's correct. The informal sector includes unrecorded and untaxed economic activities. Can you explain it a bit?
Since these activities are unregistered, they are not included in GDP because there is no proper data. For example, a street vendor selling vegetables or a housemaid working without a contract are part of the informal sector.
Very well, Vansh. Let's move to next question. 42. Why is real GDP preferred over nominal GDP?
Real GDP is better than nominal GDP because it removes the effect of inflation and shows the actual growth of the economy.
Correct, Rashi. Real GDP accounts for inflation while nominal GDP does not. Can you explain it a bit?
Nominal GDP can rise just because prices go up, even if production stays the same. Real GDP adjusts for price changes, giving a clearer picture of economic growth.
Very well, Mahi. Moving to next question. 43. How does government spending affect GDP?
Ma'am, government spending helps grow the economy by increasing demand for goods and services.
That's correct, Ansh. Government spending increases aggregate demand, boosting GDP. Can you explain it a bit?
When the government spends on roads, schools, healthcare, or defense, it creates jobs and business opportunities, boosting GDP. Example, if the government builds a highway, it pays workers and buys materials, which increases total spending and GDP.
Very well, Ansh. Moving to next question. 44. What is the difference between GDP and GVA?
Gross value added, GVA, shows the value added by all businesses in an economy, while gross domestic product, GDP, includes taxes and subsidies on products.
Correct, Rashi. GDP is GVA plus net indirect taxes. Can you explain it a bit more?
Yes, ma'am. GDP equals GVA plus net indirect taxes. For example, if a company makes a product worth 100 rupees and the government adds 10 rupees as tax, GDP becomes 110 rupees, while GVA remains 100 rupees.
Very good, Rashi. Let's move to next question. 45. Why is subsistence agriculture excluded from GDP?
Subsistence agriculture, when farmers grow food only for themselves, is not included in GDP because it is not sold in the market.
Very good. Subsistence agriculture is excluded if there is no market transaction. Do you want to add point in it?
GDP measures market-based production only. So subsistence agriculture will not be included as farmers grow crops just for themselves, not to sell in market.
Very good. Well explained. Let's move forward. 46. How is Human Development Index HDI calculated?
The Human Development Index, HDI, measures a country's overall development, not just its economy. HDI is calculated using 3 key factors: health, life expectancy, how long people live; education, schooling years, how educated people are; income, GDP per person, how much people earn.
That's correct. HDI combines health, education, and income indicators. Can you give an example?
A country with good healthcare, education, and income will have a higher HDI, showing better development.
Very good, Rashi. Well explained. Let's move to next question. 47. Why are services included in GDP?
Services are included in GDP because they help the economy grow, just like goods. Even though services are not physical products, they provide value and create jobs.
Very good, Vansh. Services are included as they contribute significantly to economic output. Can you give an example of services included in GDP?
Doctors, teachers, IT professionals, banks, and transport services all contribute to GDP because people pay for these services.
Very well, Vansh. Let's move to next question. 48. What is the significance of national disposable income?
National disposable income shows how much money a country has for spending and saving after receiving transfers and paying taxes.
Correct, Rashi. National disposable income shows the total income available for spending and saving in an economy. Can you give an example?
For example, if a country earns 1,000 crore rupees but also gets 200 crore rupees in foreign aid, its national disposable income becomes 1,200 crore rupees.
Well explained, Rashi. Let's move to next question. 49. What is the relationship between GNP and NNP?
GNP shows a country's total income, but machines and buildings lose value over time. NNP adjusts for this loss to show the actual usable income. Formula: NNP equals GNP minus depreciation.
Very good. NNP equals GNP minus depreciation. Can you give an example?
If a country's GNP is 500 crore rupees and 50 crore rupees is lost due to depreciation, then NNP equals 450 crore rupees.
Okay, good class. Let's move to next question. 50. How do taxes impact GDP?
Taxes impact GDP by affecting how much people spend and how much the government spends.
That's correct. If there's higher taxes, people have less money to spend, which can slow down GDP. And if there's lower taxes, people spend more, boosting GDP. Okay, Ansh, do you want to add any other point?
Yes, ma'am, indirect taxes are included in GDP at market prices.
Good, Ansh. Just keep in mind, higher taxes decrease in GDP as there will be less production of goods. Let's move forward to next question. 51. What is the relationship between GNP and GDP?
GDP only counts money earned within a country, and GNP includes all income earned by a country's people, whether inside or outside the country. Formula of GNP equals GDP plus NFIA, net factor income from abroad.
Very good. GNP equals GDP plus NFIA, net factor income from abroad. Can you explain it a bit?
For example, if Indian workers earn money in the US, it adds to India's GNP but not its GDP.
Correct, okay, class? Let's move forward. 52. Why are indirect taxes added to GDP?
Indirect taxes like GST or VAT are added to GDP because they increase the final price of goods and services.
That's correct. Indirect taxes are added to GDP because they increase the final price of goods and services. Can you give an example?
If a product costs 100 rupees and there is 10 rupees tax, the final price is 110 rupees, which is included in GDP. So indirect taxes increase the market value of goods and services.
That's correct. Let's move to next question. 53. What is the production boundary?
The production boundary decides which activities count in GDP and which do not.
That's correct, Ansh. The production boundary decides which activities count in GDP and which do not. Can you explain it for better clearance?
It includes things made for buying and selling. It excludes unpaid work because it's not sold in the market. For example, a baker selling cakes is included in GDP, but a mom baking at home is not.
Very good. Let's move to next question. 54. Why are household services excluded from GDP?
Household services are not included in GDP because they are not bought or sold in the market.
That's correct. Household services are not included in GDP because they are not bought or sold in the market. Can you give an example?
Cooking or cleaning at home is unpaid work, so it doesn't count in GDP. As GDP only counts activities that involve money, so unpaid household work are not count in GDP.
Very good, Mahi. Let's move forward. 55. What is national disposable income?
National disposable income is the total money a country has after adding any extra income from other countries, like foreign aid or gifts.
Correct, Rashi. National disposable income is the total money a country has, shows how much a nation can spend or save, including both earnings and help from outside. Can you give an example?
For example, if a country earns 1,000 crore rupees but also gets 200 crore rupees in foreign aid, its national disposable income becomes 1,200 crore rupees.
That's correct. Let's move to next question. 56. How does inflation affect GDP?
Inflation increases nominal GDP, but inflation does not affect real GDP.
That's correct. Inflation increases nominal GDP, but inflation does not affect real GDP. Can you explain it?
If prices double but production stays the same, nominal GDP rises but real GDP remains unchanged.
Correct, Mahi. Let's move to next question. 57. Why are profits included in national income?
Profits are included in national income because they are earnings from production or selling of goods.
That's correct, Vansh. Profits are included in national income because they are earnings from production or selling of goods. Can you explain it?
Businesses make profits by selling goods and services, and this is part of the total income of a country, which is counted in national income.
That's correct. Let's move to next question. 58. What is the difference between gross investment and net investment?
Gross investment is the total money spent on new buildings, machines, and tools. Net investment is what's left after subtracting depreciation, wear and tear.
Correct. Net investment equals gross investment minus depreciation. Can you give an example?
If a company buys machines for 100 crore rupees but 10 crore rupees worth of old machines wear out, net investment equals 90 crore rupees.
Good. Let's move to next question. 59. How is income from abroad treated in GDP?
Income from abroad is not included in GDP because GDP only counts production inside the country.
That's correct. Income from abroad is not included in GDP because GDP only counts production inside the country. Can you explain it?
Income from abroad is included in GNP since GNP measures the total income of a country's people, even if earned abroad, not in GDP.
Good. Income from abroad included in GNP. Okay class, let's see the last question for today's video. 60. Why is education considered a part of the tertiary sector?
Income from abroad is included in GNP since GNP measures the total income of a country's people, even if earned abroad, not in GDP.
That's correct. Education is part of the tertiary sector because it provides services, not physical goods. Can you tell more about it?
Teaching and learning are service-based activities, so education is classified under the tertiary sector.
Okay class, that's all for today's video. We covered important concepts related to national income and I hope your doubts are cleared. If you have any questions, feel free to comment below. Thanks for watching. See you in the next video.
Thank you for watching. Don't forget to like, share, and subscribe for more updates. For more information or to purchase the full course, feel free to reach out to us.